you know what I'm going to do? This is the S&P 500. And as you can see, it's going down. So I just want to let everyone know right now, I use really simple indicators. And the reason I do is because I kind of subscribe to Benjamin Graham's idea that in the short term, the market is a voting machine. And so I'm going to show you the indicators that I use. They've been around for a while and they work really, really well. But right now, I just want to enter any stock that somebody is interested in, and we'll take a look at it. Anything?
You see the chat, right?
Oh, okay. So that's what I'm going by. Okay, I'm switching back and forth between the chat and my screen. Okay. Da 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 da. OPCH. Option Care Health. This is a daily, and here's another real quick point I want to make is, one person says, one chartist, one technical analyst says, hey, this stock is going up. And another analyst says this stock is going down. And they can actually be both right depending on the time frame you're talking about. So just looking at this chart, obviously it's got a higher high. Let's actually zoom out a little bit and go to a year and just see how this one's done. Okay, so this is a pretty bullish chart, and you can see why. The stock is higher than this previous high back in September. It dropped. I would suspect this big drop, this big gap down is probably on earnings, but I'd have to go back and check. We have another big gap higher, and that is about 3 months later. So that could be a better earnings announcement. But like I say, I don't have the fundamentals in front of me. The point is that in general, this stock is trending up. If I was going to trade this thing, and typically the trades that I do are options trades that last about 10 days or less, I would trade this stock to the downside, and for obvious reasons. Now, let me go over my technical indicators really quick. The one you see in the middle here is MACD. You're probably very familiar with that if you've done any kind of technical analysis at all. That's the moving average convergence divergence. That's where we're kind of looking for trade possibilities. We're either looking for divergence, where the MACD is going down and the stock is going up, and one of them has to adjust, or we're looking for convergence where they both agree. In this particular case, they both agree. So as you can see, the MACD is going down, the stock is going down. So that tells us that this is probably going to be heading down. Now let's get back to that voting machine thing a little bit. So the second piece of the analytic tool that I use, the technical analysis tool, is this blue line down here in the bottom. And I found this to be very relevant for Ben Graham's voting machine thesis. And the idea there is if a stock goes up, does it go up on a tiny amount of volume or a large amount of volume? And conversely, when it goes down, is it the same? So what we want is we want volume to confirm the move, because in the short term, the market is a voting machine. So if a whole bunch of people think it's going to go up, you're going to see that reflected in the volume. And so right here the on balance volume is really simple. Every single day, they add up the volume to the downside, the sells, and the volume to the upside, the buys, and they come up with a number, and they attach it to this line, and it's what forms the line. If in this case, in this particular stock, there's since actually kind of mid-November here, there's been much more accumulation of this stock than there has been selling. So even though that we've got a downturn right here, you can see the on-balance volume has not gone down. So I would say the initial analysis is correct, where overall this is a bullish stock. In the short term, it's a bearish stock. Let's take a look at Yelp. Oh my goodness gracious. This is kind of, I love these kind of stocks. They're sort of like the classic what's been going on in the market lately. Um, so it's like, if Trump says we're going to put on more tariffs, the market crashes. If Trump says, oh, we're going to have a little bit of flexibility, we're going to give some of these countries a break, the market goes straight up. So what's kind of somewhat hilarious about, it's not so hilarious if you're losing money, but what's somewhat hilarious about this market right now is, from a technical standpoint, it's hard to trade because the big influence on the stock market right now is purely fundamental. It's like whatever comes out of the White House is what drives the market. So right here, I would say that Yelp is a little on the bearish side, and I'll just tell you why. So once again, we're going back to this real basic um, uh, technical analysis. And I like to use the basics because the more complicated it gets, the more we get away from that voting machine. So if a whole bunch of traders out there, maybe the majority of traders, can recognize a downtrend or an uptrend or a head and shoulders pattern or a simple breakdown of support, more people are going to be voting in that direction. So it's my theory, and you can think about this on your own, is the more complicated you get with technical analysis, basically the less effective it is. So this is, we have support at about 32.76. So we just draw a line here, 32.76. And we can see that, support's kind of been broken. It hasn't been decisively broken, but it's really flirting with breaking down. This is a good bearish play. And if you want a good entry point for either a short or a put or a call spread, I would say a decisive break below this low right here at 32.57 is your signal. You can also go down here to the MACD and see this thing is already bearish. We're forming a bearish histogram down below. And we can see that the volume on this thing is like nothing but selling. So if you want to trade this, I'd wait for the break of support and I would trade to the downside. Okay, so we got silver here. Let's see. I don't think high is a symbol, but thank you, Mason, for saying hello. I appreciate that. And we got silver. So for silver, I'm going to do the SLV, and that is the silver ETF. And the metals are super, super hot right now. Although, you know what? I got to say, silver doesn't look too hot. I don't think I'd trade this thing. Unless you want to do a non-directional strategy like a credit spread, where you sell calls above or you sell puts below. As bullish as gold has been, silver just is not cooperating. Now I realize, and I get them in my inbox every single day, where they go, oh, you got to invest in silver because the silver gold ratio is all messed up, and silver is really going to catch up, and you're going to make a fortune and all that. And I've been trading for, oh my gosh, a long time now. I hate to admit it, but I've been trading for over 30 years, and I've gotten on the bandwagon, the silver and gold bandwagon before. And man, I have just been burned so many times. These things, the dollar goes down, so gold and silver should go up. And then maybe that doesn't happen. So every time you think you got a lock on this, you kind of get a surprise. For me, directionally, this is an untradeable asset right here. Okay, Sabina wants Mara. So let's take a look. This is Mara Holdings. This looks to me kind of interesting here. Let me so we have a really pronounced downtrend here. So once again, I know everybody gets real complicated on you, and if you like that, more power to you. Let's do some Kelter bands or even Fibonacci, trying to figure out, is this a fifth wave or a fourth wave or a third wave? I forget. Let's just do some really simple trend lines here. And this is obviously in a downtrend. We have a slight uptick here. The way that I would trade this is, honestly, when this overhead resistance line gets hit, I would go short. That's a good time to go short. We're going back here a year, and we're trading here in the low range for the year. I mean, this actually looks like an excellent short to me. Um, and here's the thing: Mara or Sabina says that they're a Bitcoin miner. That's great. Bitcoin could be going up, and the miner could be going down. They're not necessarily perfectly correlated. Um, and so this one looks really rough right here. I mean, it doesn't look rough. It looks good for a downside trade. And if you're a trader right now, let me just make a pitch for being able to trade in either direction. So your classic stock trader trades to the upside. That works great most of the time. Most of the time, the market's going up. But there's a lot of times when even uptrending stocks go down, and there's a lot of times where downtrending stocks definitely go down. And as you know, if you traded any length of time, stocks fall faster than they rise. So you can actually make more money on the downside quicker than you can on the upside. Speaking of trading in both directions, if you are not an options trader yet, there's actually some pretty big advantages. If you've tried options and lost money trading options, you're exactly the person I want to talk to. I was really good at losing money at options at one time. I think I blew my account up completely where I lost it at least 3 different times. Then I learned some things about options trading that make a huge difference. I want to give you access to all of that, and I don't want you to have to give me your email. So this is not some pitch to, advertise to you for the rest of your life. I just want you to have something good that's free. So you can do that by going to free options training, not trading, freeoptionstraining.com. And I've got an 8 video set for you. The first 6 videos really show you about options, how to get on the right side of the probability curve. The 7th video shows you my absolutely favorite option strategies where you actually have to work to screw it up, to lose money, because the probabilities are stacked in your favor, 80 to 90%. And then the 8th video just shows you how you can take advantage of all of that if you're interested. Okay, so freeoptionstraining.com. And do we have another symbol? I'm happy to stay here kind of as long as you guys want to stay here. If you don't have any more symbols to look at, that's fine with me. But if somebody wants to enter something, I'm totally interested in taking a look at it. By the way, okay, MCD, so McDonald's. Who doesn't like fast food? Yeah, of course you don't want to admit it because we're all healthy and getting in shape and care about our bodies, but I'll tell you, the stuff actually tastes pretty good. Okay, McDonald's. So here's another one that is, frankly, just in glancing at this stock, it looks like it's waiting to break out. That's what it looks like. So we've got it, it just back about a year ago from July to, gosh, all the way into November, this thing was just absolutely screaming higher. Probably missed an earnings report here. These big gaps down are usually what's going on there. They did better sideways, bit of a sideways market for even the most bullish trades. This one looks like a break higher. I would just take, this top line, whatever you want to use for resistance here, and on a break of that, go long. You got really good on balance volume here. You have a real sideways MACD, which would what you'd expect when you see this sideways action. But you can just set a trigger and go long when this thing breaks higher. And I think breaking higher is exactly what it'll do. Okay, Sabina, I love you because you're giving me charts. And you want to know about Woof. And that sounds like a cool stock. And Petco, that's what a great ticker symbol. I absolutely love that. Okay, here's a stock that is rising from the dead. And you can actually do pretty well on stocks that are rising from the dead. So we got this big downtrend. You can even go up here where, the funny thing about drawing these lines is you can kind of draw them wherever you want. But there's a theory in technical analysis. I'm sure you know this theory, and that is that old resistance, once broken, turns into new support. It's exactly what we've got here. We've got a really nice bounce off of this support line. The stock is rising. It's rising on the MACD. It's rising on the on balance volume. This is what we call a tradable breakout. So you could probably go long on this. Now, the caveat on this is always the overall market. So you can take the best bullish setup in the world, and this looks like a great one right here. And the White House could come out with something in 5 minutes and the market drops 200 points. I mean, we've seen this happen over the last week and a half. Challenging market. You have to develop, if you want to trade, you have to develop a thesis. If you can't develop a thesis on what's going to happen in the overall kind of direction of the market, if you can't do that, if you're going, it's just too confusing to me right now, I can't trust anything, it's okay to step aside. Cash is a position. You don't have to be all invested all the time. In fact, you shouldn't be. Let's see. Oh, the link. Actually, I can type a message. Do you want me to put it in here? I'm going to put in free options. Oh, David beat me to it, man. You are so quick with the fingers there, David. Okay, what else do we have? What do we have for tickers? Let's talk about stocks and what we can do with them. Let me get my cursor over here. Give me a hard one. Give me one that's confusing the heck out of you. Give me one that you might want to make some money on. Oh, Tesla. This is one of my favorites. God, Tesla is such a fascinating freaking company to watch. And they move. I mean, if you're into, oh, look, I already got a trend line here. So right now we're in sideways mode. I'm going to just draw some lines here just to make this a little bit easier to see. Yeah, it went way up. Yeah, it came way down. As you can see, it's kind of found support here. And it's been going sideways. This support goes all the way back here to last year, a year ago. What we have right now is the MACD going up. As you can see here, a little troubling. The volume recently has been going down. This sort of coincides with this action right here. I'll tell you something about Tesla. For a long time, I didn't like the fundamentals on Tesla. I don't know if you guys follow Tesla, but I've read a lot about them. I'm just kind of fascinated with the whole scene, Elon Musk and what he's up to. And oh, by the way, if you hate Teslas and you think that, Elon Musk is terrible and all that, I have a suggestion. Drive a Tesla. So, put any politics aside and just fricking drive one. I mean, they will blow your mind. I think they're the coolest cars in the world. They're fast and they're quiet and they handle incredibly well. So I like all of those things. And I bet in the early days, I didn't like the fundamentals of Tesla. I thought that they were burning too much cash. I thought they didn't have a chance of ever being profitable. I've been proven wrong, and wronger. And every time I've shorted the stock, it's gone straight through the roof. So what I would say here is we actually have a decent chance of a breakout. I wouldn't trade it yet. On the upside, I think it's pretty well defined. I would trade it on a breakout of 2090 on the upside. And if you do want to trade the downside, you can trade the downside around 213. I would just make it a short-term trade because Tesla has a habit of turning around and ripping your face off. So whatever it is about that stock, people seem to like it. Be interesting to see how the politics play out. I know that it's been sold lately, but I've been following the news and people aren't keying Teslas quite as often as they used to. So maybe that's all settling down. I think some people get really upset about creating more efficiency in the government. And maybe that's the reason that they're keying the Teslas. But as far as the stock goes, I think this thing could blast higher. But wait for it. Right now, it's not giving us any single signals at all. Okay, let's take a look at IAU. This is from Pat. Oh my goodness gracious, Pat, I want to congratulate you for finding the needle in the haystack. So this stock is one of those rare, and incredibly rare stocks that is going up in a market that has really taken a beating. And When we see what it is, we can see why this is the iShares Gold ETF. This is one way to trade gold. Another way to trade gold is the GLD. And of course, you can also get on the futures market and trade gold. But this one's pretty easy to figure out. Um, Once again, let's just do something simple and draw a very simple trend line here. This is a really good one to go long as soon as it retraces. Retraces are rare on gold lately. We saw one right here. That would be a fantastic entry point. We have something called, this is just a name I came up with, but it's called the greatest option strategy on earth. If you go to freeoptionstrading.com, you'll see it delineated on video 7. I think you're going to absolutely love the strategy as it applies to gold right here. So just real simple in a nutshell. You go long with a long option that's a 70 delta, excuse me, and then whenever we actually use the MACD as a signal, but whenever this thing gets overbought, like where it is right now, you sell out of the money against it. You collect a whole lot of checks on the way to a big pot of gold at the end of the rainbow. So that's a strategy that I think you're absolutely going to love. It would work great for gold. I'm thinking for my subscribers, I'm thinking about entering a greatest option strategy on earth trade on gold here pretty soon. But I want to see, I don't want to do it now. I want to see a retracement back around here to this on this particular chart about the 58 level. And then that would be a fantastic place to go long. The GLD has weekly options. I don't know if the IAU does. It might, but that's what you need to do this strategy. So let's take a look at, and this is from MCAT, and this is DocuSign, DOCU. Okay, so this is an interesting trade, and this has once again a lot to do with your time frame. So as you can see, DocuSign is an overall downtrend, and it had some support right here, which it at about, so let's say 68.60, pretty much broke it a little over a week and a half ago. And now it's kind of bouncing back. You've got the MACD getting ready to turn up. The on-balance volume doesn't look too bad, but that's all just in the short term. And there might be a trade in here to collect just a little bit up to the 80 level or a little bit more. I would say, if I had to trade this, I would say I'd let it rise a little bit to about 80 or so, and then I would trade it to the downside with a pretty strict stop, somewhere around this line right here. So if you hit 80, you trade it to the downside and it goes above your stop, you're out. But this is an overall downtrending stock where I think, all we're doing here when we trade is we're trading the probabilities. So as you know, as a trader, if you've done this for any length of time at all, I don't care how good the setup is. I don't care how good the fundamentals are. There's absolutely no guarantee. One of the most frustrating things as a trader is to do absolutely everything right, to do what you've been taught, to find a stock that is going in the right direction from a technical standpoint and a fundamental standpoint, make that trade and get stopped out at a loss. You really feel like you're being abused, and you shouldn't, because you don't have any control over which way the stock market goes and which way an individual stock goes. What you do have control over and what you really want to pay attention to is your game. Are you doing it for all the right reasons? Do the fundamentals line up? Do the technicals line up? Does everything look perfect? And then you make the trade and you set your stop to limit your loss. If you do all of that and your stop still gets hit, you cannot feel bad. You did everything right. And I'll give you a little analogy right now. Is I've been playing some pickleball lately, and maybe a lot of people have been playing. It's spring. We can finally get outside, and I've been playing. And when you're playing usually with 3 other people. So you got a partner and you're playing against 2 other people. And when I would lose, I would get really upset. I'd get really angry. When my partner would screw up, I'd get really upset. And then finally, I stopped myself one day and I said, why are you playing this game? And I go, well, I'm playing it for fun. I want to get some exercise and I want to play. I want to have some fun. And then this voice comes back and says, well, then why are you getting so upset about everybody? Why are you getting so upset about the other team being a little bit better than you or your partner not being quite as good as you'd like? Why is that screwing you up, and making you upset? And I go, well, there's no reason why it should. And then this voice comes back and says, you only have control over one thing, and that's how you play. So if you're doing everything right, you're rushing to the kitchen line after the second shot. You're practicing what you should. You're trying to put the ball where they're not. You're not making fundamental mistakes. If you're doing all of that and you're playing your best game and you lose that game, that's actually okay. You should feel good about that because maybe the other team was just more skilled or they're better. That's okay too. You want to play people that are better than you. So all you have control, and the moral of the story is all you have control over is yourself. And even control over that takes quite a bit of discipline. I mean, how many of us haven't jumped into a trade that we just thought was cool or we heard about it on the news? I mean, when I first started trading, I traded stocks that popped up on CNBC. I watched stock TV all the time. Finally, it occurred to me one day, is hearing about a stock on CNBC and then running to trade it on my computer is not a very good way to trade. That's not very good analysis. In fact, it's no analysis at all. So work on your game, work on your technical analysis, work on your fundamental reasons, know why you're getting in a trade, know when the right time to get out of a trade is. If your thesis is wrong, and this is really tough for those of us that trade on a platform, those of us that have subscribers, when you're trading in front of a whole bunch of people, it's hard to be wrong because that means you're wrong. You weren't smart enough or whatever. So what I do now is when I recommend trades, I give everybody the stop going into the trade. I don't say we're going to just see how this thing works out. If the thesis is wrong or if something changes in the market that makes your thesis incorrect, get out of the trade. A big technique, a big strategy for winning at trading is conserving your capital. Super, super important. So do we have any other tickers? Now, listen, my time is just about up here, and I always want to respect the other speaker. But the other speaker, for whatever reason, couldn't be here today. So I can take a little bit of extra time. I don't think I can take the whole half hour. But if you guys have a ticker and you're interested in something, let's take a look at it. I'd like to see what you're thinking, and I'd like to see what the stock looks like. So go ahead and enter something if you're curious. By the way, while we're waiting, and I'm just going to make sure and look over here and make sure that somebody enters a ticker, I'm going to be on it. Oh, we got a couple of them. But I just want to take a quick look at the S&P 500. Look at this baby. Everybody says, oh, we're in a bull market. We're coming back. We're coming back. We haven't even broken this downtrend line. So, it's still bearish out there. Okay, we got some to take a look at here. Oh, we got some good ones. Okay, I'm going to try and speed things up. So we have Altria. This is a really fabulous dividend stock, by the way, if you're into this kind of thing. As you can see in the short term, the MACD is going down, but the MACD is starting to turn up. The on-balance volume is actually pretty good. And here's the big thing. And stocks tend to revert to their overall trend. Here's what you want to take a look at Altria. This is the basic idea right here. This stock is going up. So Altria is one of those, and Mo, the ticker symbol is for Philip Morris, if you're wondering where that came from. The overall trend on this stock is up. So when you have an uptrending stock like this, what you want to do is take your bullish position when that thing is sitting on support. The cool thing about that is if it breaks support, you have should have a very, very, very short distance to your stop. In other words, you're putting your stop right in here somewhere. And if you do get stopped out, you lose very little money, but my goodness sakes, look at the upside here. So Philip Morris is a great bullish stock right now. I actually really like this in kind of a bearish environment. This looks good. Let's take a look at Costco, which is another one of my perennial favorites. It's very heavily traded. Generally speaking, Costco goes up. Generally speaking, Costco makes money. What would be the big concern about Costco right now? Do you think they get any of their stuff from China? I think they do. So what we have here is kind of the classic uptrend, 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 uptrend. We have a big break, and I'd have to go back and take a look, but I think this big breakdown coincides with some of the tariff announcements, and then we have the stock trading below uh, old support turns into new resistance, and that's exactly what this line is telling us. In the short term, yeah, the MACD's turning up. We got the stock going up a little bit. On balance volume is completely and totally sideways. It's completely undecided. This isn't bullish. This isn't bearish. I would be hesitant because of the fundamentals. I'd be hesitant to bet against Costco. I think overall it's a really good bullish play. I think it always has been. If you're going to bet on the downside, if you're going to bet on a stock going down, I have a clue for you. And this is from a person that's bet on the downside a lot. Is make sure you have everything going for you you possibly can. That means the fundamentals are bad and the technicals are bad, and hopefully the overall market is bad. That's a good time to make money on the downside. Why is the downside more difficult than the upside? Because everybody and their pet mule wants to see the market go up. Everybody, your broker, your fellow traders, the indices themselves, the people that run the company, everybody wants to see stocks go higher. So if you're going to bet on the downside, just know that you're betting against the entire universe. And if this stock ticks higher just a little bit, it can create a short covering rally, especially if there's a lot of shorts in the stock, and you can really lose money fast. So the easy money, generally speaking, the easy money is on the upside. I think Costco has very bullish fundamentals. So even though this chart looks a little bearish, it broke its support level, I'd be hesitant to bet on the downside on Costco. I think if anything, I'd bet on the upside. As soon as the tariffs are resolved, I think Costco goes higher. Let's take a look at MWA. Okay, Mueller Water Products. I have a little concern on this one, just at a quick glance. And one of the reasons I don't like to use a whole lot of indicators is I want to see things fairly quickly. Look at this. All the way at the bottom here, the on-balance volume. Somebody suddenly did not want to be in this stock at all. It had this selling here is not here. Wait a second. This selling right here, which corresponds to our line down below here on balance volume, this selling is not regular selling. This selling is backed up by massive, massive volume. Now, here's another one similar to Costco, where you have a stock with, depending on where we want to draw this thing, it's in an overall uptrend. So that's really good. Broke its uptrend line, probably based on tariff news, like so many others. So on a stock like this, I would take a serious look at the fundamentals, and I would see why somebody sold so much of this stock all at the same time. Could be they import a lot of their equipment and manufacturing from China. I don't know. I don't know the story on it. I do know Costco's kind of bullish like all the time. I don't know about Mueller Water Products. So if you're into this one, trade it. Maybe this is an opportunity. Maybe it pops back above this line and it keeps on going and it's a great bullish trade. I see the MACD's kind of turning around in the short term, and we would expect that with this going on. But I'd be pretty cautious on this one. I don't think I would trade it in either direction right now. If we have a big run past this resistance line, we do have a higher, we have a high here, and we have a higher high here. And we have just a successive higher highs all the way up. So overall, it's a bullish stock. I think when the tariff issues get resolved, maybe this one heads higher. Right now, I would wait just a little bit. OT. Let's take a look. So this is AT&T. gosh, once again, I mean, good Lord, this is a this is like jumping on an escalator, right? For so long, no big moves. I mean, this is actually kind of up until it started getting volatile. This is like a dream stock. These are so easy to trade where there's small incremental moves higher, where the stock isn't doing anything crazy. It just keeps moving higher. Now, on a $20 stock, yeah, you're not going to make a lot of money buying the stock. You buy the right option, or you sell put spreads against this thing, or you do the greatest option strategy on earth, and you buy a really long-term option and then sell whenever this thing peaks. And actually, in that video 7 and freeoptionstraining.com, I'll tell you exactly when to sell. It has to do with the MACD. I don't hold anything back. I mean, I want you guys to be successful. Totally free. You don't even have to give me your email. Just go there and take a look at it. I think you'll like it. As far as what AT&T is doing now, I know this is crazy in this kind of a market, but I see this as a bullish stock. It broke down just a little bit right here in this range right here, and then it's never really broken below this just general long-term support line. Turns out that this was actually a buying signal. You can wait. This might go down a little bit further, but MACD is already turning up. Look at this on balance volume. This looks to me, without knowing anything about the fundamentals about AT&T, this looks to me like one of those stocks traders are going to in a storm, where the tariffs are crazy, the techs are going wild. The yesterday's darling is today's pariah. Nvidia has been going down, and money a lot of the time has to go somewhere, so it shifts into these really safe stocks. It looks like AT&T is one of those stocks to me. It never really got hit hard. This is a good bullish play. Look, the person that brought this is Raju Shah. Raju, I just want to say thank you for giving us AT&T. Beautiful stock. Very nice. Hard to find a really good bullish play in this market. It's been so crazy. This is Duke Energy, of course, very much traded, tied in with what oil's doing. I don't know if you guys just noticed, but OPEC, actually Saudi Arabia, who is, the 800-pound gorilla in OPEC, they just announced a huge production increase. They're trying to punish some of the OPEC members that have been cheating. And so they decided to really open the spigot. And so oil has been going down. Duke Energy, on the other hand, is not doing too bad. We have a higher low. We actually have, if you look, we have a higher high. We have a stock that has gone up 1, 2, 3, 4, 5 days in a row. MACD is just getting ready to cross over. Look at this on balance volume down here. This is the voting machine that we're always talking about. By the way, on balance volume was created by Joseph Granville back in 1963. And so this is not a newfangled technical indicator. This one's been around for a long time. Almost nobody uses it, and I do not know why. It tells you the vote on a stock. So you combine price action with on balance volume, you got a really good idea which way this stock is going. I think Duke Energy, shockingly, looks pretty good right here. Even the lows, the recent lows, are higher than the last lows. The highs are higher. Duke Energy looks good. In the context of the overall oil market right now, I would have to say Duke Energy, if you investigate it, probably has some really good looking fundamentals. And Pat would probably know more about that than me. He's the one that provided this ticker. But if we go back and we look at Duke, I bet they're doing pretty well. This looks like a pretty decent bullish play to me in a market that's been absolutely crazy. Do you want to go against what the overall oil market is doing? I don't know if that's wise. I don't know if that's smart. But if you want to investigate the stock and find out why it's going up, it's kind of defying the overall market. And that's one of the things we look for is divergence. One thing I will say, though, that in general in trading, try and go with the overall market. And if the overall market is real mixed, some sectors are going up and some sectors are going down, go with whatever direction that sector is in. So right now, if the oil market was going down, I would look for the ugliest sister in the oil market right now. I would look for the stock that's going down, having fundamental problems, not sure they're going to make it. And then also, of course, if you're going to short something, you can't short a super low price stock because there's no upside there. So you want to short something that's got a pretty high price, but it's heading lower. Okay. Right now I'm on borrowed time. I'm over my time limit. I think it's okay with David that I stay for just a little while. But we don't have any new tickers. Let me just take a look. If you want me to stick around, oh, here's one, ISRG. Okay. Thank you, Frederick. ISRG. Oh, Intuitive Surgical. Now, hasn't this been a story? Frederick, I hope you've been in this for many, many years because this is one of those stocks that just made people millionaires. And the thing about those kind of stocks like the NVIDIAs of the world, this is ISRG, by the way, is Intuitive Surgical, and they are like the NVIDIA of the healthcare world. They're just freaking amazing. And you just look at their stock, it peaks at over $600. And look at this trend line. But I'll tell you what, even for the best stock in the world, some like NVIDIA, sometimes the party is over. And with Intuitive Surgical, I think the party's over, kind of like now. But what would really give us the indication on that, what would really seal the stock's fate, of course, price is the arbiter. Price is the king of everything. But also volume makes a big difference. And volume really is not that bearish. Volume's been going sideways. So take a look at the fundamentals of Intuitive Surgical. Usually these go-go stocks that have just made people so much money and have gone up for so many years, usually what kills them is not that earnings are going down. It's not that revenue is going down. It's simply that revenue is not increasing at the same rate that it was. Now, this is totally understandable. It's really easy to take $1 and turn it into $2 and go, oh, look, we had 100% revenue increase. It's much more difficult to take $2 billion and turn it into $4 billion. So as a company gets bigger, it's hard to see those huge percentage increases, and it's totally understandable. So you can have a stock that's still growing, doing incredibly well, making absolute mountains of money. And the stock market goes, what? They didn't have a 200% revenue increase again this quarter? Well, I'm going to sell my shares. So a lot of the time people get rid of really good stocks for not such good reasons. Now, I will say that if valuations get out of hand, if valuations get to the point where the stock price makes no sense whatsoever, yeah, maybe that's a good time to lighten up the load a little bit. Don't know what's happening with Intuitive Surgical, but I would suspect that's the case. I'd suspect that the revenue isn't increasing quite as fast as it has in the past. And that's why it's selling. And we've also got a market that's a little uncertain right now. I've got a question from Mark. In general, if this is, I like these kind of questions, Mark. So thank you very much. In general, if going long with options, how much time do you recommend buying? This is awesome. Okay, so this is a little bit of a trick question because you're assuming I'm buying. I do a lot of selling. So I'm going to just give you a general rule of thumb from an old options trader. And that is, if you're going to buy an option, buy 3 times more time than you think it's going to take for your deal to play out. So if you think the action's going to happen in a week, buy at least 3 weeks of time. And time will never go by so fast in your life than after you buy an option. It's like, oh my gosh, expiration is just looming in the windshield. It's coming fast. Options running out of time have lost more money for options traders than any other single factor. Took me a long time to realize that. So what I did is I switched on the other side of the options trade. So now what I do is I sell about 10 days a time. Why 10? 9 days a time. Why do I do that? Because there's still enough time to get you plenty of premium, and you can sell a strike that's plenty out of the money. So in this case right here, what I would do is I would say, oh, let's see, this thing's going down. We've got resistance right here. I would go up somewhere, depending on what the premium was. I'd consider selling a strike somewhere in this range right here. I would put it on a pretty short fuse. So I don't know what this is, 418. I'd go out maybe about to the end of the month, and I would sell a call spread. And the probabilities are so far in your favor, it'll blow your mind. It's actually a strange happening when you lose. Because in order for you to lose on this trade, the stock would have to completely turn around, go against trend, and go right through your sold strike. And of course, I put a stop right on the sold strike. So you're going to lose a minimum amount of money. If you don't know what I'm talking about, please go to freeoptionstraining.com and see. It's all free. I don't collect your email. I don't do anything. But if you're really interested in making money with options, this is how people make money. The smart traders, the pros, they sell options for a living. The amateurs provide us with all of our money. So I love the amateurs. They're the folks that buy options. There is a time and a place to buy options, but generally speaking, selling is going to be your bread and butter. Okay, let's see what else we have. BAPA, Eli Lilly. Oh boy, they didn't like Kennedy getting in, did they? Boy, those stocks have just really taken a hit. So Eli Lilly's had a little bit of a tough time here. I'm not crazy about the healthcare stocks right now because there is going to be so much change coming. In general, if you look at Lilly, just to get a really big picture, you've got lower highs and lower lows, which is the classic definition of a downtrend. Would I short it right here? Not on your life. You'll short it right here, and the thing will go all the way up to this uptrend line. We've got a MACD that's turning around. We've got a stock that's turning around. It's got this gap to fill right here. It'll probably fill it. We've got on-balance volume that's going in. A lot of the time, the healthcare stocks attract money when, when things are dicey in the market, because everybody needs healthcare. That's not going to go away. If you need an operation and that operation is going to save your life, do you really care if there's tariffs against China? You're going to get that operation. So a lot of the time, healthcare stocks attract money out of the fast market, out of the speculative market, and it's a great place to park money while you're waiting for things to turn around. Right now, that's not necessarily the case because there's going to be so much regulatory change that happens with big pharma. Everything's changing. There's a new philosophy here. So this is a dicey part of the market to trade right now. I think there'll be a big opportunity in healthcare at some point. I love healthcare generally as a sector because all the reasons we just mentioned. But Eli Lilly doesn't look good to me right now. It's not a good, it could be a good short-term long. I mean, if you want to be in this thing for a week, it's pretty easy. Your stop is going to be just below this support line, and you can trade it up for a little while. It doesn't look like a good long-term long, but it looks like a good short-term long. Does not look like a good short right here. Not after it's just bounced. And we've got Fred with ALK. Let's take a quick look. Oh my gosh, this thing has just fallen off a cliff. This is Alaska Air Group. The airlines right now are not doing good. Did you guys catch the news this morning that China has refused Boeing airplanes to any purchase of Boeing planes? So if you don't know this, so a lot of this tariff negotiation right now, the trade war, whatever you want to call it, is around trade imbalances. So what's interesting about Boeing is they are the single company that makes the majority of our positive trade balance. In other words, their airplanes are so expensive, they're the one component that contributes the most to our positive trade balance. And then all of those little things that we buy, little things and big things from China, contribute to our negative balance. So we have a negative trade balance with China. Everybody knows that. Just a quick comment. By the way, sticking to this stock, looks like a good short to me. It's even come all the way up to, even if we flatten things out a little, it's come all the way up to resistance. Even though the MACD is starting to turn up, that's only because of this little blip right here. That doesn't mean anything. Look down here. This is the voting machine. Do you think people want to own Alaska Airlines right now? They're getting hit from a couple different angles. Um, but one of the big ones is in an uncertain market and with people, so much of people's wealth tied up in the stock market, it has a big influence on consumer sentiment. And a lot of people travel for fun, for enjoyment, for pleasure. And a lot of that travel is curtailed when people are uncertain, and even business travel. I mean, now with Zoom, a lot of companies are saying to their sales force, listen, do it on Zoom. You don't need to fly across the country to go talk to somebody. So I would say right here, Alaska Airlines is actually setting up as a pretty darn good short. So Fred, you found a good one here. Um, Also, I just want to mention something about tariffs, as long as we're talking about the market. So every time I turn on the news or I look at something, an update about the tariffs, the general consensus, about 90% of the articles that I read are all about the pain to the American people. And can we, in this fragile time, can we even support any kind of tariff negotiations? And aren't we just going to go into a recession right away? And aren't tariffs just a tax on the American people and the consumer? And what is this Trump thinking, doing such terrible things to us? Well, in any kind of negotiation, I think the really smart way to look at it is look at the two parties involved and who has the most to gain and who has the most to lose. So naturally, because we're here in the United States, everybody's talking about what does the US have to lose with a tariff war, particularly with China. I think a relevant question is, what does China have to lose? I mean, the trade balance is so huge, which is one of the things these trade negotiations are trying to address. But they have way, way far more to lose than we do. And if you look at the stock market, our stock market went down noticeably when the tariffs were announced and when Liberation Day came around. And if you look at the Chinese stock market, it didn't hardly go down at all. So people are pointing at that and going, well, look, the Americans are suffering and the Chinese stock market's doing just fine. You got to understand, we have a stock market. We have a real stock market here. This is why other countries like to invest in their stock market. There's actual price discovery here. Whereas over in China, they sold a bunch of treasuries to raise money to buy stocks on their own stock market. The government did that. It's completely fake. It's completely manipulated. So China is trying to make it look like, oh, this thing is not affecting them at all. It affects them far more than it affects us. So people can fake it for a little, or a whole country can fake it for a short amount of time. They can't fake it for a long amount of time, especially when their economy is already in the toilet because of their real estate crash several years ago that they still never recovered from. Now, the average person in China puts their investment savings into real estate. Here in the United States, it's in the stock market through 401ks and retirement programs. You know what? That's my rant for the day. And I hope that didn't go too long. And I think it's time for me to bow out. We've got our next presenter coming up. I want to thank everyone that was here. I want to especially thank the people that provided ticker symbols. And once again, to say thank you, you don't have to give me your email. I'm not collecting any information. Go to Free Options Training and be sure and focus in on that video 7. I think you're going to learn some things. I think you're going to be blown away about stacking the deck in your favor. So thank you very much for being here, and we'll see you